I request the esteemed panelists, Dr. R. Vishal IAS, Professor Govinda Rao, Professor N.R. Bhanumurthy, and Professor K.J. Joseph to take their seats on the dais.
Bani.
Distinguished academicians, esteemed professors, valued guests joining us both in person and online, dedicated students and research scholars, a very warm welcome to the valedictory session of the International Conference on Rethinking Public Finance for Emerging Development Challenges. Over the past 4 days, we have engaged in insightful discussions, exchanged invaluable ideas, and explored innovative solutions to address the evolving landscape of public finance. As we bring this enriching conference to a close, it's a privilege to have distinguished personalities among us to guide this valedictory session. We're honored to extend a warmest welcome to Dr. R. Vishal IAS, Finance Secretary of the Government of Karnataka, who will be chairing this session. So, your vast expertise and leadership in the realm of finance and governance make your presence truly invaluable, and we deeply appreciate your time and insights. It is also our privilege to welcome the distinguished Professor Govinda Rao, member of the 14th Finance Commission and chairman of the High Power Committee for the Redressal of Regional Imbalances in Karnataka. So it's an honor to have you with us, and we eagerly look forward to your valedictory address. We're equally honored to welcome Dr. Pranab Sen, former chairman of the National Statistical Commission, who will serve as a discussion initiator. So your expertise will undoubtedly enrich your discourse, and we're delighted to have you with us for this valedictory session. We extend a warm welcome to Professor N.R. Bhanumurthy, Director of the Madras School of Economics. So we're privileged to have you deliver the concluding remarks for this session. We also extend a warm welcome to Professor K.J. Joseph, Director of the Gulati Institute of Finance and Taxation, who will also be delivering the concluding remarks. With this, I now have the distinct honor of inviting our esteemed chair, Dr. Vishal IAS, to take over the proceedings of this valedictory session. Thank you.
Thanks, Riju. Nice of you. Professor M. Govindra, Professor Bhanumurthy, Professor Joseph, dignitaries of the dais, ladies and gentlemen. 2 decades plus in the IAS, 2 things I've realized. First, get things done. To get things done, you require 2 things: understanding of the subject and ability to close on it. That's what makes us effective. In finance department, I always look at 2 things. First, what is the absolute quantum of money I have and the percentage of it is there? Second, what is the quality of expenditure I can give? This is the first thing in finance department. Incidentally, I'm the secretary planning, also the director of the Fiscal Policy Institute. As secretary planning, the most important role I do is look at the SDGs, Sustainable Development Goals. When I take finance and I take planning together, I look at sustainability in 4 ways: financial sustainability, economic sustainability, environmental sustainability, operational bar administrative sustainability. If you do not approach an issue keeping these 4 prongs in mind, you will actually not deliver. Till today, I've done budget 14 years back. I'm again doing budgets now. I may do a budget in future also. If you do not get your basics in mind and understand how much of quantum you can prioritize at an opportunity cost of some other funds, how much you can close on those things. I use 2 terms always to achieve my aims. One is called ICOR, incremental capital output ratio. The lesser the ICOR, the better is your performance for every rupee you put in. Second is the cost benefit ratio, cost effective ratio. Cost benefit ratio, the lesser the cost, the more the benefits is what we aim. And the alternates which are available for you to achieve these, which is the cost effective ratio. So whenever you're doing financial targeting of a scheme, of a program, etc., get into these 3 terminologies: ICOR, CBR, CER. To this, add those 4 prongs of sustainability: financial, economic, environmental, bar operational, operational bar administrative. This will help us achieve things better. The second important thing which I would like to speak, I've had a very limited exposure since yesterday evening till today. Yesterday I had a very detailed discussion with Professor Joseph. Today I've been sitting across certain seminars. Until policymakers, until administrators get sensitized to some of your excellent presentations, the thought provoke, they will keep doing things the normal way, thinking that is the way it is done, unless their ideas get clarified or they get that fundamental idea behind things. So, how much can administration and academia work together becomes a very, very important thing. I will not take further time. As and when a question comes, I will respond. Thank you very much to Gulati Institute of Finance and Taxation for inviting me on behalf of the institute. It's a privilege for the government of Karnataka and to me personally to be here. Thank you very much.
Thank you, sir. I now invite Professor Govindarao to deliver the valedictory address.
It's there. Huh?
You have a PowerPoint?
Yeah. Okay. Good afternoon, friends. Dr. Vishal, Professor Joseph, Manu, Pranab. It's a pleasure to be on the same this thing, though you are far away. We have been friends for, we haven't met for a long, long time. At least virtually we can, meet. Um, and my dear friends, I can see a lot of tiredness. In the morning itself, they talked about Joseph. I can see a lot of tiredness after 4 days of intense discussion. And much of public finance discussion has been, sort of brought down to the issue of federal state relations for most of them. So I thought I would say something slightly different. And therefore, I'm basically talking about some aspects of tax compliance with special reference to India. Uh, just to say that public finance is not just intergovernmental finance. Public finance has something much more to talk about. Of course, there are people who work on debt, and particularly coming at the state level, issues of deficit in debt is much more relevant for the union government than to the states. And to the states, it is important to the extent that you have to bear the interest burden. So what I intend to do is, where do I have to? Huh? Which one? This one or this? It didn't work. That's what. Yeah. So let me start by saying that the taxes matter. But taxes involve incentives. No one likes to pay taxes, but everyone wants high quality public services. So when you have what the economists call public goods, that there is nobody can be excluded from the benefits of that. There is always a tendency to free ride. And when there is a tendency to free ride, there is no possibility of revealing the preferences. And since you cannot reveal preferences, you cannot determine the supply and demand, and therefore you can't determine the price. Since you can't determine the price, you need to force people to pay for the public services and therefore the taxes. Now, free riding is inherent feature of the public good because of the non-rivalry and non-excludability characteristics of a public good. Now, what I intend to do today is to talk about how do you really improve the tax compliance. Even there, since nobody likes to pay taxes, everybody wants to dodge. They will all find ways and means of dodging the taxes, but the government has to collect revenue. The subject is important as tax evasion and willful avoidance result in both horizontal and vertical inequity. There is always there are always people saying that, low, that that shopkeeper doesn't pay the tax, but I have to pay the tax. So, so obviously compliance is important and evasion should be avoided. So discussion on this is useful to improve the structure and administration to enhance the ease of paying taxes. So taxes are a necessary evil in all civilized societies because public goods must be financed from compulsory payments as for the reasons I mentioned. Now, there are cases, for example, you can go to a club. There is a sort of a public service that they provide which is common. But then that is possible in a small group. So voluntary action, for the financing a service through a voluntary action for a small group is possible. And in large communities, it does not result in optimal provision of public services. The best practice approach to tax design and reform is to minimize the three costs associated with the taxes: the collection cost, the compliance cost, and the tax in terms of the cost in terms of the distortion that it creates in the society. So hence the focus should be on, so we need to minimize these costs while maximizing revenue. Obviously, revenue has to be maximized. So the focus is on better administration and minimizing compliance problems. Dilemmas on compliance are different from for the tax collector and the taxpayer. Now, tax collector has a much difficult job because taxpayer is always one step ahead of the tax collector. So their dilemmas are very different. One wants to ensure better collection, and the other wants to minimize the payments. See, it is important to design the structure and enforcement mechanism to ensure greater equity and effectiveness. The better the tax compliance, the lower will be the rate of tax required to realize the given amount of revenue. What are the major determinants of tax compliance? Tax compliance is a multiplicative function of the rate of tax, probability of detection, and the penalty rate. Now, if any one of these things fail, obviously the compliance will fall. Allingham and Sandmo in a 1972 paper said that taxes are evaded to maximize utility by those people. Everybody wants to maximize utility. In the process, they evade it. And they are considered illegal only due to penalty and detection. If it is not detected and if penalty is not given, then it is not illegal. And therefore, there is a lot of work that has been done on the behavioral aspects of tax compliance, particularly by Joel Slemrod. He said that behavioral information on strictness of enforcement, because all the time, if there is a lot of publicity saying that the enforcement is tough, you will be caught this way or you will be caught that way, that behavioral information on strictness of enforcement helps in better compliance. The important factor that determines the tax compliance is the structure of the tax. And we did talk about the Laffer curve analysis. At very high rates of tax, the tax revenue might decline. Now, in fact, this was the basis of Reagan reforms or the Tax Reform Act of 1986. In fact, even the United States and UK in the 60s and the early 70s had a marginal tax rate equivalent to 90%. And it's only, it's the Reagan reforms where, the Tax Reform Act of 1986, which basically said broaden the base, reduce the rate differences, and have a simple and transparent tax system. In India, revenue productivity actually increased from the 1996 reform. I will come to that in a little while. So the structure of the tax, the simple the structure of the tax, better it is to administer, better it is to comply. In fact, there are very few studies on tax compliance. I think the only study that I know of is the one which was done by Arindam Dasgupta at NIPFP. That was just at the time I was joining NIPFP in 2003. And Arindam was not very comfortable with that study because he didn't get the data that he was able to get was, in fact, he was not satisfied because very few people really responded to the questionnaire that he was giving. But still, I said that this is the only one. And, in fact, I said this should be. So there is a working paper on compliance cost at NIPFP. But besides that, Dasgupta and Lahi and Dilip Mukherjee had an empiric study in much before the 2002 study, that was in 1908, on income tax from 1965-66 to 92-93. In that study, it showed that both revenues collected and the tax compliance were significantly affected by marginal tax rates. But if the marginal tax rates are higher, obviously the it was significantly affected by the marginal tax rates, the enforcement methods. I'm sorry, my marginal tax rates and the exemption limit, and the inflation and traditional methods also have hurt revenue. If there was a much better modern method of assessment or administration, they say that revenue could have increased by about 90%. I mean, there's a beautiful book, Arindam Dasgupta and Dilip Mukherjee had published on tax administration. I think you should get a copy of that. I mean, that was, it was a aftermath of Radha Chalaya Committee's report, because they were basically initially helping Radha Chalaya Committee, and later they came out with this book. The other important thing that I want to emphasize about tax compliance is the importance of technology. Importance of the technology in tax administration and enforcement. Now, the typical example is what is called the Tax Information Network, which I have spoken yesterday. In 2003, there was a comment by the Controller and Auditor General saying that those entities which were supposed to deduct the tax at source and file the return, deducted the tax at source, filed the return, but then didn't pay the money to the government. And there was no information system which would track the TDS, tax deduction at source, so that you see that these are matched. It's in that environment, Dr. Vijay Kelkar was the advisor to the Finance Ministry. He asked the National Security Development NSDL to basically work out this the entire tax information network, where they went city by city by basically sort of asking the entities which are deducting the tax at source to submit in a CD or online what the amount of money that they have done, they have deducted and deposited, and matching it with the respective bank transactions. And just this matching, they were able to, in fact, if you really see, between 2003, 4 and 2007, 8, the income tax revenue, both from personal tax and corporation tax, increased at the rate of 36% per year. As a percentage of GDP, the increase was more than somewhere about 4.5%. So, if you don't really use the technology, the probability of detection will be much less, and obviously tax payment will be much less. There is other important thing is the Vixelian connection. If I know that by paying the taxes, I am also going to get good quality services, then obviously I would be willing to pay the tax. If I know that I'm putting the money in a black hole, certainly, I'll always be hesitant. So the linkage between revenue and expenditure decisions, to the extent that you are able to do, and we should do. But surprisingly, in that sense of the term, at the lower level, we should be able to collect much more taxes, because at the lower level, it is much better to link the revenue and expenditure decisions. But then, if you have a soft budget constraint, or if you have no intention to provide quality public services, things don't work. People take more. So the voluntary compliance will be less if you don't have the linkage. The most important problem that I want to highlight today is the tax evasion or lack of compliance by multinational companies. Multinationals locating in tax havens and low tax jurisdictions is a problem. They do it through transfer pricing. They use they borrow money from the tax havens and then pay at high interest rates and show it as an expenditure and reduce the profits, or they say that this is that is. I mean, they will have only some small box there, and that is the head office, and say that all the sort of inventions and the things are done there, patents are from there, and pay huge amount of royalty. So in the process, these are some of the ways in which they dot the payment. Now, obviously, G20 countries went to the OECD and asked them to work on the base erosion and profit shifting. There is a 15-point action plan that with the this thing done, but much of it has not worked. But there are two important things in the 15-point action plan that has worked. One is 140 countries are signatories mandating information exchange on financial transactions by banks since 2017. If somebody has seen, 2 weeks ago, there was an information that in India, something like 29,500 crores of international money has been transacted. So there is an information exchange on that. And, in fact, more than 10% of the global GDP was held in terms of financial assets by households in tax havens. But now the volume held, even now they are holding that. Volume held is similar. But then I think the tax evasion is estimated at about, just about 25%. Now, the other second important thing that agreement that has happened is that they all agreed that there should be a global minimum tax on profits. More than 100 countries are signatory to this, but sadly, United States of America is not a signatory to this. And United States companies just dot the entire thing. So this particular action is supposed to increase the tax revenue by 10%, but actually increases much less. This is because there is a non-compliance by the banks, and they create some shell banks. There are race to the bottom because every country is indulging in a race to the bottom and reducing the tax rates, and use of shell companies to evade the tax payments, and so on. And so there are several loopholes in the process. There is another thing that has happened when the things are getting tightened. When you say that there has to be information exchange, etc., etc., high net worth individuals are now putting a lot of money in real estates. And in India, for example, the real estate ownership by Indians in Dubai is 20% of the cross-border ownership of properties there. US is not a signatory to the common reporting standards that they have put, and the US corporations account for 40% of the profit shifting to tax havens. So this is so obviously when you are talking about multinational corporations and high net worth individuals in the model, now actually you can buy, after Trump came in, you can buy the citizenship there by paying money. So, you have a variety of ways in which you can basically dodge. Some aspect in India, for example, historically India had a complex tax structure. In marginal tax rates in 1973 was 85% plus 15% surcharge on 85%, which means 97.975%. And either the people did not earn the money, or if they earned the money, they did not tell that they earned the money. And there were 11 different tax rates in addition to exemption. So tax rates were increasing monotonically from 10% to 85%. So there was a committee called the Chokshi Committee, which basically looked at it and then said that one of the major reasons for the tax evasion is the high tax rates, and then you need to really rationalize that. Complex, excise duties and sales taxes, completely complex things. In the excise duties, you had ad valorem rates, specific rates, ad valorem come specific rates, and several rates, and it's impossible to. So in that particular environment, LKJ committee said that you need to move over to what is called the modified value-added tax, and they didn't. After converging the number of rates, they didn't convert the rates. And when Vishwanath Pratap Singh became the Prime Minister, I'm the finance minister, he decided to embark on this thing after about 10 years. The report was submitted in 1976, and he came in 1987. He simply adopted the MODVAT. MODVAT became MADVAT. And, obviously, the compliance declined. And if you see that excise duty in revenue from revenue in 81, I'm sorry, in 91 and 2001, there is a 1 percentage point decline in excise duty revenue. So, and of course, the Chelaya committee and Chidambaram reforms were that they reduced the number of rates. The non-rate, zero rates in the Chelaya committee report was reduced to 4 with a maximum rate of 40%. And in 1996, Chidambaram reduced the number of rates into non-zero rates into 3, with the maximum rate being 30%, 10, 20, and 30%. Now, subsequently, in fact, there was no loss in revenue productivity. The exercises show that there has been a gain in revenue productivity. Now, but then the problem with this thing is, I think, basic reform, basic philosophy of the tax policy, that you need to have a broad base, low rate, low rate differences. But then if you trust the tax policy with a number of objectives of savings, investment in certain assets, and housing, and a number of other things, then what happens is you open up sort of avenues for evasion and avoidance. So that's one of the major problems that you have. The tax base of income tax, for example, is not very much, and there are too many objectives of tax policy. But taxes are supposed to raise revenue, and we should focus it on raising revenue. So what happened is that now the present, I think, in fact, even Chidambaram, they wanted to have a direct scattered taxes code. There was a lot of exercise done, and in fact, I mean, they had sent the draft to me. I had seen that at an APFP, and that was a much better thing, where all these exemptions were to be phased out. But anyway, better late than never. They're basically trying to do the new tax system. But I still don't understand why you need to have parallel tax system, old and new. And I still don't understand why you need to have 7 different rates. Because whenever you have more rates, there will be a lot of activities around that rate. It impacts on the tax complex. So I hope better sense will prevail, and they will only have tax, they will broaden the base, reduce the rate, and reduce the rate differences. And I talked about that I'm not going to talk about it now. And on the indirect taxes, as I said, there was a low compliance, and we talked about this thing. There is one thing that I just want to say. I happen to have written a paper in 1992 on taxation of services in Asia Pacific region for the Asian Development Bank. Dr. Chela got hold of that. He was advisor to the finance minister. And he called me and said that you should write me a paper on tax efficient services in India. So, I mean, he asked one of the officials of the Central Board of Excise and Customs to work with me. And at that time, services was neither in the union list or the state list. What I did was said, since it is neither in the state list or central list, I said it belongs to the center, because it's the residually it goes to the center. Then we worked out a revenue sort of estimate for 3 services: non-life insurance, stock brokerage, and telecom. And I didn't know that this was of any use, but then we gave it to him. And in the 1993 budget, for the first time, service tax was imposed. And once that was imposed, it became larger. The idea was that if you are taxing consumption, commodities can be taxed, services cannot be taxed. There is a non-neutrality, and therefore the service tax. And it came in from 1994 budget. So introduction of a VAT, we know of that. But then when you did that GST, the technology form was not properly developed. GST was far too complicated. But unlike in the case of, subnational GST, as I said, exists only in Canada, European Union, and Brazil. I mean, that these are the only three countries. But then all of them had what is called a zero rating, which means when the exports, the taxes on exports are given back to the last at the last point. But here we didn't want to have the zero rating, so we wanted to have a clearinghouse mechanism, and that requirement of the technology is much more when you have to have the clearinghouse technology. But the technology platform took a considerable amount of time to settle down, and since the technology platform didn't settle down, first year, for example, even the IGST revenue was allocated according to the Finance Commission formula, which is completely this thing. And this was pointed out by the Controller and Auditor General. So, in the, even then, things have settled down. GST has come to stay. Now, this is the time for the second stage of reform, as I mentioned. Reduce the number of rates, reduce the exemptions, and so that you see, so you have a broader base, and you will have, in most of the countries where value-added tax was imposed, it has turned out to be a money machine, but not in our country. But in fact, a week ago, there was a Lok Sabha in the statement by the Minister of State for Finance in Lok Sabha, who said that in the current fiscal until January, central officers have detected 25,397 cases of evasion in GST of amounting to 1.95 lakh crore. Of this, 1,318 cases are input tax credit fraud cases involving 46,472 crore. So we have a long way to really, stabilize this technology platform. And so it's important that, we take full cognizance of that, and then hopefully, if you make the system simpler, I think the technology platform can be easily much, sort of done better. So, need to simplify the structure of taxes. You need to have reasonable rates, and we need to have the second stage of the GST reform sooner than later. Use of technology is extremely important. Constant upgradation and use of artificial intelligence. Today, if you see, even a tender coconut seller is using a digital payment, sort of payment thing. So it would not be very difficult, at least at a medium scale, to find out what is the turnover of various establishments. And from there, you can actually, using the artificial intelligence, identify, or at least bring out the suspicious cases. And at least when you increase the probability of detection, voluntary compliance will increase. And ease of payment, tax payment is very important. And this is particularly so at the local level, because if I have to travel something like 200 kilometers to pay some 10 rupees tax, for the panchayats, I don't want to do it. So the best thing is ease of payment is extremely important. In fact, in Bangalore, in a sense, was quite successful in its property tax, because right from the time in 2003 when they introduced the new system, they had an online payment of a self-assessment tax. And today, Bangalore is collecting the property tax revenue from Bangalore, but the entire Tamil Nadu is not able to collect. That is the situation. So the other important thing is that, for heaven's sake, don't get involved in retrospective taxation. I think we need to look for perspective. Recently, there was a Supreme Court judgment on the minerals, and that gives a wrong signal to the businesses. And I think retrospective taxation should be avoided, and to improve our revenue forecasting, because thankfully, in the last few years, the revenue forecasting has been realistic. Otherwise, in order to show a lower fiscal deficit, you exaggerate the revenues, give the targets to the revenue collectors at a much higher rate, and they go about assessing the tax unrealistically. And when they really unrealistically assess the tax, there is a provision that if you dispute, you have to pay 20% of the tax. And then obviously you collect 20% of the tax and they go to the tribunal. 76% of the cases in the tribunal are are decided in favor of SSCs. 75% in the case of high courts are decided in the case of SSCs, and over 70% in the Supreme Court are decided in favor of SSCs. So when you have this sort of a situation, now the point is, I mean, this is the number that is given in a audit, this thing by the, because on that money, once you, this thing, the union government has to pay interest. So there is a huge amount of interest that goes, and this is the one pointed out by the Controller and Auditor General. So one has to be very careful about it. Responsive tax administration is the most important need of the hour. When I say tax administration, you also need to have a very good taxpayer service, which in our country we don't have. Taxpayer service is very critical. In fact, it was Milka Kastenegger of the IMF tax administration from IMF who said, in developing countries, tax administration is tax policy. Thank you very much.
Thank you, Professor Govindarao, for the thought-provoking valedictory address. I now invite Dr. Pranab Sen to initiate the discussion. Over to you, sir.
He had some internet connectivity problem at home. He told that it could correct it. He will join by 4:30, but I don't think that he's online. He's not. Yeah, I think it's only appropriate that. Okay, you know. Yeah. So I guess we should ask. Sir, will you take questions? Yeah. Can I request a couple of questions from sir? Anybody? Please introduce yourself.
Thank you very much, sir. My name is Shurajit Das. I teach in JNU. Thanks a lot, sir. I have listened to your lecture after quite a long time, and it is always interesting, and I could learn a lot of things. Sir, I was referring to some of the recent works by Vito Tanzi and Pranab Bardhan. They are talking about political corruption. I mean, in a privately funded political system, the kind of system that we have in our country, do you think that tax compliance is, or very low tax compliance has something to do with political rent or political corruption, which many people commonsensically talk about? But what is your take on this? Thank you, sir.
Can I have any of the students please asking a question? Some of you give very good discourse on BEPS. Any student from GIFT? Nobody? Then I'll have to ask somebody. Okay, anybody else, please? Yeah.
Yes. Sir, thank you very much for this lecture. It was quite an interesting one.
Can you introduce yourself?
My name is Zakaria Siddiqui. I teach at Jamia Millia Islamia, Delhi. So my question is that the initial part of your discussion was more focused towards compliance, mainly in the area of direct taxation. But when we came to the end of the discussion, it came more towards indirect taxation. But in my view, the challenges of compliance in the two types of taxation is quite different. So how do you see that in terms of like current regime that we are having in terms of GST vis-a-vis the direct tax? Both of them, what kind? So the direct taxation,
Direct tax.
getting compliance in direct taxation is quite different from getting compliance in indirect taxation, right, sir? And technology platforms
Can you
may
go
be
slow?
quite different.
Can you go slow when you're pronouncing?
Okay.
Okay.
Is it clear, sir?
Yeah, okay. Anybody else, please? Anybody else? Okay, I would request, sir, you can answer these two. In the meanwhile, somebody else may also be there.
Yeah, thank you. Whether it is political or non-political, corruption will basically result in lower compliance. Now, obviously, the person who is corrupt and he has taken rent is not going to report to the tax authority that he has taken the rent. Now, whether there is a political corruption, yes, corruption, yes, there can be political corruption. There is, every country has it. Some countries have more, some countries have less. But how much you have is not something which you can do. That is precisely the reason why, if you try to keep the tax system simple, if you try to have a good information system in place, would you bring in a lot of technology and including artificial intelligence, you will be able to possibly force or persuade or nudge voluntary compliance. So at the end of the day, it's an environment that really has to, you have to create. Now, there is a corruption giving, corruption taking. So both of them are crimes. But the point is, now you should be in a position to reduce the scope for corruption and increase the probability of detection and have a reasonable tax structure. That's the point that I'm trying to make. And on other direct or indirect, I don't make a distinction, in terms of that. No, I mean, as I did mention the thing that the use of technology in tax information network, how it increased the direct tax collections. And obviously, I talked about the GST because GST, the technology platform has not settled. So what is important is that when you have a simple tax system, it's also easier for you to have, devise your, technology platform, and then easier for you to get this thing. I mean, now there is a further issue. Now, if you have more tax rates as we have, then many of them there will be a lot of disputes, and many of them will try to take the lower cost, and then courts don't take a decision for years together, and sort of you have 31 tax laws at the state level. So you do have a problem. So we need to simplify both the tax structure and administration, and use the technology both for indirect and direct taxes. I mean, it's not one, either or, it's both.
There is a gentleman there who wants to ask a question. Yeah.
I'm Ramana Murthy, I teach in University of Hyderabad. Sir, we are looking some solutions from AI, but just to think on the flip side, who owns the AI technologies? Like if Elon Musk owns, or somebody else, some monopoly, domestic monopoly owns, there is a risk of that being captured. That's just a point. Unless existing technologies, income tax, IT technologies, I think income tax authorities have a command over it. But about AI, one has to ensure that the AI technologies are completely are secure, and they're in the one assumption one should also this point. Second is, how do we reduce the tax avoidance, and what are the changes in the company law one should do?
See, on the first, any technology that you adopt would have, good things and bad things. So it's up to, obviously the government has to take necessary steps how to use the technology. I mean, there is, and again, tax evasion, so tax collection and evasion is a race between the evader and the collector. And generally speaking, the evader is a step ahead of the collector. I mean, so, I mean, in which way? And there is a surprise element that you have to bring in. And obviously, there are, how you have to use it will have to, it's a question of how you should. It is too premature for me to say how you can use the AI technology, but I just mentioned one case, in the case of, how you can estimate the turnovers. and then match it with the incomes that are, so turnover in the, for the GST, and it can also be matched with so the income. What is the second one? Uh, Tax avoidance. Now the point is, the only way you can get into the tax avoidance is to plug the loopholes. I mean, in an Indian context, you don't should not have, for example, today, there are some things which you just can't do anything about. The constitution says that agricultural income cannot be taxed. It is not that the agriculturists are evading the income. Every other big chap has a farmhouse, and then he says this is the agricultural income. Now, so obviously most people know about it, and these are the things where certain possibly one thing that they could do is to at least get the states together and have an agreement that whatever is declared in the tax return that this is agricultural income, the union will tax and then give the money to the states. But the point is, farmers are so powerful that this was the recommendation, this was the suggestion I made to the Kelkar committee, and Kelkar made this as a recommendation. But then they said that this Kelkar, in the parliament there was a discussion, said this Kelkar is against farmers. So there is a lot of, so obviously you'll have to, you, there are many reforms which are difficult. There are reforms impossible. There are reforms that are possible. So you need to deal with the ones which are possible. The ones which are difficult, you have to make them, feasible. And ones which are impossible, we have to make them possible and then do it. No, it's a process. It's not an event. That's why I said any reform is not an event. It is a process. We have to continue to be at it.
Anybody else? Yeah, I think this gentleman here.
Who is the lady there?
Thank you.
Now she has a question.
Radha.
Uh,
Can
I go ahead?
Yeah, you please.
Yeah.
Then I'll go over there.
Sir, it was
You introduce yourself, please.
okay. I am Dennis Rajakumar from the EPW Research Foundation.
EPW research.
It was heartening to listen to your talk, sir. I have a small question which is somewhere remotely associated with your talk, but it is directed at Dr. Vishal. Sir was talking about property tax collection in Karnataka, particularly in Bangalore. I myself, I have seen they follow, I think it's a practice which is worth emulating in other states. They follow carrot and stick approach. If the property tax is paid before 30th of April every year,
Rebate.
then we get rebate.
Rebate.
If delayed, then we are penalized. Now, my question to you is, this is working extremely well because in our society we get lots of messages saying that the rebate will land. Please make the payment. It has got certain other repercussion also because the collection of waste that also in a way we will get will be threatened, right? So in many ways it works extremely well. Now my question to you is, recently you have introduced amnesty, right? To get all the taxpayers on board, right? Now, do you think that when it comes to tax compliance, when government keeps announcing this amnesty activities, would it provide a kind of disincentive for tax compliance? Now, I'm asking this question at this point because that program is still going on.
Correct.
Right. So do you have any kind of, what is the sense you get from the ground?
Three things. First, we always work on logistics. Okay. The thing for us in the government, in the urban local bodies, we did analysis in Bangalore. Okay. We did an analysis across other urban local bodies. Thumb rule, we are collecting only 30% of our possible collections. Only 70% of our properties are mapped. Out of 70%, demand is about 40%. Actual collection is 30%. If you go to any urban local body, what they say is 100% I have collected, sir, last year. What they don't tell you is they have not recast it. This is the first thing. Mr. Monesh Modgil, when he came in about 1.5 years back, he started using drone-based information, certain database in MIS, and started capturing the data. Second thing we did is put it correctly as a residential, industrial, commercial, in which things you come in. Third thing is ground truthing a little bit. We can do everything in technology, but we have to ground truth it. And then typically in income tax, typically in commercial tax, typically in property tax, we take the large defaulters. Take the top 5%, 3%, go after them. The signaling goes that nobody will be spared. So the other thing which we did from SAS, we moved into the capital value. So whenever your guidance value increases, the IGR which increases, automatically your tax rate gets better. And you get this rebate if you do it within a time. So these are multiple incremental steps. One other important thing is you do not, with Mr. Monesh Modgil, with the clarity in mind now, that we will not interfere with your work. I hope you get what I'm trying to say. We will not interfere. Do your work and go collect. There will be no interference if there's a big hotel, this thing, that thing. Go collect what is there. So that freedom was given to him. There were genuine wrong demands, which were corrected. See, what happens is when you let go of tax authorities, they are like, we can go berserk. But genuine wrong demands were also redressed. This helped the second part. Third part in this. You're on a flywheel. You're on a flywheel. You're on a flywheel. How much you learn each time and you keep ensuring it keeps moving. 6 months back, what lessons you learned, you put it into action 3 months back. 3 months back, you have improved now. Next thing which has happened is we have brought the e-khata in. Now, when you bring the e-khata in, it's an electronic khata, which has its multiplier effect on your titles, on your taxation, on your transfer of titles. A benefit of a taxation methodology, a benefit of a taxation document is not only restricted to that, it has other added value inputs. So this is how it went about. There is still a long way to go compared to some of the other things. Technology can be used more. You would be aware, if you talk to commercial tax commissioners, excise commissioners, etc., they have large taxpayer units. Okay, it's 80-20 principle. You focus your energy on those 20% of people who give you the most. Then you allow others also to come up to that level. If you try to squeeze the very small people, you actually end up spending a lot of effort and time on that. So you have to be very careful while directing your resources.
Anyway, see, the point is that if you give amnesty frequently, there is an expectation that a further amnesty. So, I mean, you have to convince that it's a once for all thing. That's
a moral hazard.
That's the thing.
That's a moral hazard.
Yeah. No,
Can I go to Madam Radha? Madam Radha. Madam Radha? Please unmute yourself. Unmute yourself.
Okay, can you hear me now?
Yes, please. Yes, please.
My name is Radha, as you have already mentioned. I'm more interested in monetary economics, but I have been a very avid follower of the programs, all the sessions here. And two questions I require some insight on is, one is, will India ever reach a stage as of abolishing income tax as in Dubai? That is one, and that is at the macro level. And very much as a personal level, I feel that when savings are taxed, it's really very punishing. Like I find all incomes in banks are taxed at one level, but when you go to withdraw your fixed deposits also, there is a tax on the interest on it. So this is rather penalizing in India, especially for income earners, of course. So if the erudite people would just give me some insight on this, it would be very helpful.
Thank you.
Thank you.
These are very important questions. Now, there is no question of abolishing the income tax, at least in the near future. And in fact, in the literature, there is some discussion on this. And Alan Orbach has written a paper of Berkeley, has written a paper where if you have a value-added tax, which is money spinner, at a certain point of time, you can actually abolish the income tax. But the fact of the matter is, in fact, you see, in my paper, when I wrote this, and later on when we met in Tokyo, he said, Govinda, you are right. That is my position. But that is because incomes earners are mobile, and obviously it is difficult to catch them. Therefore, sort of both capital and the capital involved labor is difficult to tax. But you can definitely tax natural resources and minerals. So there is, but in any case, that's all academic issue. But income tax is here to stay. They will be there. And the other question of taxation of interest. So when you earn the income, you pay the tax, and you save money. And when you save the money, you put it in the bank, and bank gives you interest, and that's a new income. And when it's a new income, so the income tax man, for income tax man, that's a new income, so he levies the tax on that. Just as when he put the money in the money in the stocks or debentures, when you get the dividends, that is also is supposed to be taxed. That's the way. No, that's the way it works.
I
Thank you,
think,
sir. Thank you.
I think I'm very grateful to all the people who raised very valid and pertinent questions. I'm grateful to Professor M. Govind Rao for his excellent discourse and being the father of public finance. Thank you very much, sir, for all your time and discourse. I thank the Gulati Institute of Finance and Taxation for giving me this opportunity. Thank you very much.
Sincere thank you to Dr. R. Vishal IAS for guiding today's session with his insights and expertise. I request Professor M. Govindarao to present Dr. R. Vishal IAS with a memento.
Should I present something to Professor Govind Rao? Next one, please.
I now invite Professor K.J. Joseph, Director of the Gulati Institute of Finance and
Okay, anyway, I think now we have to conclude everything by 5 o'clock. That's okay. Good evening, friends. You all know that every good things comes to an end. It has to come to an end. Yeah, I think we will reserve next 5 minutes for if anybody has anything to give to us by way of any feedback, any words, maybe maximum 5 minutes. Then we will talk. From the floor, anybody has to say, we are going to close the thing before you leave. If there's anything to say, please, you can. Just give the mic over there. Not.
It's an excellent conference, excellently organized. I think on public finance, I have not seen such mammoth conference. Congratulations to all of you and your team.
Thank you. I think, yeah. Yeah. If anybody has any idea towards making it better, that will be getting a prize next year. No more prize now. Only next conference. That's right. Prize are all over. You don't want to have any postponed reward. You would like to have postponed reward.
No, I was just thinking, it was an excellent conference. I was just thinking that you may probably consider publishing some of the articles
Definitely.
based on reviews.
Definitely.
Of course, a conference volume will be good, but then through a very comprehensive review process, can you think of you possibly think of a book or a journal special issue wherever it is possible. So I thought that would be very useful. And maybe another suggestion for your consideration. I think it will be good to have within public finance some conference on themes.
Pardon?
on themes
Specific.
like future of FRBM,
Right.
fiscal responsibility. Maybe a one-day
Excellent.
seminar on that would
Excellent.
be more useful.
Excellent.
On tax
Excellent.
policy, one
Excellent.
seminar would be very useful. So that would also help more focused, more engaging discussions on these issues
Ex-
within public finance. Thank you
Excellent.
very much.
Excellent suggestion. Excellent suggestion. Yeah. DN, you have only 3 more minutes.
Yeah, I will just take 1 minute. I just want to say a big thanks to the PhD scholars and the young faculty, because what we saw was the energy, and that is what made
That
this
is
conference.
that's what you saw upfront. There's much behind happened. That I'll come to that.
No. I have seen the behind also.
Okay.
Joseph, after all, I was in this place for such a long time. Huh? So that's why I thought I should get up and say,
Very good.
because that's what, and I, I'm so happy about it, because, my attachment with the PhD program in this place. So it was so lovely and so wonderful to see them.
Thank you. Thank you, DN. Yeah. Thank you, DN. Yeah. I think, yeah. I think normally in this kind of conferences, we conclude with what actually happened and takeaways from that. That's what ideally one should have, but I'm sure we will be able to do that. And as Pinaki rightly said, any conference, if without tangible outcome, is a waste. So I take that. No. And you didn't say I take that, because I take it a step forward. Unless there are tangible outcomes, it's a waste. So yeah, exactly. So we are very much committed to that. And I must tell you that if I'm to kind of say in a few words what actually happened, I think we had, as someone rightly said, perhaps the largest congregation of public finance scholars in the country. And almost all those who matters in the area of public finance in this country were here either virtually or physically. And all the more importantly, we could locate a large number of young minds, the future public finance scholars of this country we could see here. And in fact, the kind of insight that each of the 6 plenary sessions that came up with, and more importantly, the Gulati Centenary Lecture and the last concluding session. And in fact, all these 8 sessions were immensely insightful, and it has actually, these 8 sessions paid enough for, in fact, it's a much reward for the hard work that we have invested. In fact, we consider the reward of the very healthy discussions that happened in these 30 parallel sessions, technical sessions, 5 into 6 technical sessions of 5 papers, 4 papers each. And in fact, they who really paid the biggest reward for the hard work that we invested. When I say we, I'm so happy that it was indeed wonderful, fascinating, and without any problematic. It's such a seamless, smooth working with Madras School of Economics. And Manu was he's a wonderful guy, wonderful person. And I must say that we had 3 co-coordinators. Can I ask them to stand up there? We have Ranjit, Plessy, and Kiran. I think I don't have anything to give them, so let me give these 3 bouquets to them. We'll pass it on. Can you come over here? I think I'll come over there.
Sustainable development.
I think, pardon? Okay, now, Dean already said about the hard work that our PhD scholars and my young faculty did. But I would like to say that, they did a lot of work, but I would like to place to begin with my non-teaching staff. Can you please stand up? Please stand up. Give them a big hand, all of you, because Abhilash, Varun, Jaya, all of you, like, in fact, if I keep on talking to their contribution, they have been trying to see, unlike the administration of any place, unlike the administration in this country, they were trying to do how to get things done rather than the normal administration is how not to do things. We know that when in any office which we go. So why don't you should also start? I mean, I hope you stood up. Okay, now I think my faculty colleagues, I don't need to kind of say anything, but you must stand up. Anita, where is the eldest onwards? Thomas, then all my youngsters, please stand up. I think you have seen, where is Nirmal? Where is Nirmal? Nirmal also not anyway. Nirmal, who is it? Who is sitting? Hey, Ranjit, come on, you stand up. Yes. Yeah. I think they were actually they were the spirit or the engine behind the magnificent display of organizational committed work, my young PhD scholars. All of you, please stand up. I would like to give all of you a wonderful hug. Hey, where are you? Come on, you. I forgot, Ashwini is sitting here. So I think I must say that they have meticulously been trying all their level best to make you comfortable as possible. I'm very sure that I'm sure there must have been, I don't think that I have left anyone behind. My interns, two of them. Yes. Yes, two interns. Wonderful. Yes. I hope I have not left anyone. Now, I don't have another person behind, another person, most important person to be thanked. There are two persons. One is Satyam Thomas Isaac, and other is here our beloved, esteemed, distinguished professor of this institute, Professor M. Govindarao. Give them a big hand. Okay, I would like to give you once again. Stop. Need to give my wonderful friend and every part they have here to be I must say that I think this is actually, I think we have decided that we will have an association, and that association will be an association of inclusion, an association of deliberation, vibrant deliberation, and that association will be a venue of vibrant deliberation, and we will fight, we will differ, but we will differ with respect and affection. And we will all get back to you on that. With this note, let me conclude. Thank you very much. Okay, I must also forget. Come on. I forgot the partnering organizations. This is the first one. Fiscal policy. And Dr. Vishal, thank you very much. I think we are meeting for the first time. You are so remarkable. Thank you very much. Wish you all the best. Thank you very much. And we have Madras School of Economics is there, of course. And 5 minutes, yeah. I did 2 minutes. Kerala Economic Association, who is here? Godwin is here? You are representing. No, you not double voting, only a single voting. And Thapar University, of course, they are the first one. They came forward to this side. Okay, we would like to, and Lakendra was coming on. And of course, ICS sir. We thank all of them. And where are our drivers? They are working. Hi, where is, please you also, I think because they are the people who put a lot of physical labor. Ratnaraj and Sajindran. Yeah, okay. I thank all of you once again. I think I think, and all the more importantly from KEA, they all came all the way. I can see from SB College, friends here. They are all from come on. Santosh, come on. Hi, here. Yeah. And of course, I thank our esteemed Fathasan is here, Jos is there. Benny came all the way from the day one onwards. And of course, my adjunct faculty, uh, Zakaria is there. So I think, look, we place on record our appreciation to all of you. Thank you very much.
Thank you, sir. Now, may I invite Professor N.R. Bhanumurthy, Director of the Madras School of Economics, to deliver the concluding remarks.
So I'll assure you, I'll not take more time. So first of all, let me thank Professor Govind Rao, my teacher, my boss, of course, for giving this valedictory address, and to Dr. Vishal. He's a MBBS doctor, okay? He's not from economics. But I can tell you that his knowledge on state finances, fiscal policies, very amazing. In fact, last month, we were together in one of the union budget. I was really impressed by his, usually the state bureaucracy don't look at the union budgets. But I think the way he articulated the union budget is really amazing. And I think I learned a lot from you, Vishal, that time. And thank you so much for coming to Trivandrum and being part of this conference. Normally, we used to have pre-conference workshop, something like that. But this is more of a pre-association conference, okay? It's almost looking like the conference. If you have association and if you have a next year annual conference, it will be as much almost similar to what we had today. So in that sense, I think the objectives of this conference are really achieved. and really thankful to the advisory committee of Center for Public Finance, Madras School of Economics, and also the Gulati Institute of Finance and Taxation for making this event a very successful one. And I'm sure the paper writers, particularly the students, benefited a lot from the events on the daytime and also the DJ, right? I should recommend, Joseph, that we should have a DJ now because we're all tired. I think this is the time you should have a DJ. I know all of you have not really got into Instagram for the past 3 days. So I hope you will take care of your Instagram from tomorrow. But I think I'm sure you learned a lot from this 3-day conference than the Instagram. Going forward, as Dr. Joseph pointed out, we'll come back to all of you with some concrete proposal in terms of association. We had some discussions on the second day, the first day, right? So we have some concrete proposals, and we'll come back to all of you with all those proposals, and hope to have some structure soon. And again, we'll keep getting together in the next year. I'm glad that this institution's fiscal policy institution came on board. I think Professor Narayana was also online. Yes, I'm glad that people from Fiscal Policy Institute also participated, supported financially also. I think that's another important event. So we'd like to get more similar centers as part of this networking, so that going forward we'll have much more strong team in terms of the conference as well as seminars. As Pinaki pointed out, it will be very useful if you have a thematic seminars, not necessarily 3-day thing. I think we can have a 1 day or something. That's one of the objectives that we already have. So I think we look forward for more inputs from all the participants so that going forward, I think we can have more activities under the networking that we have. So last but not least, I would like to thank Madras School of Economics, Center for Public Finance, Dr. Rangarajan, although he's not here physically, but every day he keeps track of what exactly happening. So almost every day basis, I'm updating him, and he's very happy that this conference went on very well, and he looks forward for any kind of feedback from this event. So I think I completed my 2 minutes. So thank you so much. And Sir is looking at me, so I know. Thank you so much. And I thank you once again, all of you, particularly students. I mean, as I said, I already recommended DJ for you. I hope you get the DJ from Professor Joseph.
We'll try.
Thank you once again.
Thank you, sir. With that, we formally conclude the International Conference on Rethinking Public Finance for Emerging Development Challenges. Thank you all.